Welcome. In this explainer, we're going to break down a really powerful framework for building wealth. And we're going to do it by telling the story of two very different investors and see how their choices lead to two, well, vastly different lives. Okay, so let's meet our two characters. Over here, we have Tom. We'll call him the patient builder. He's all about following a process, a framework, and playing the long game. And on the other side, that's Steven, the hype chaser. He's listening to the crowd, always hunting for those hot tips, because he wants to get rich and he wants to get rich quick. Now, they both want the same thing, wealth, but their paths, you'll see, could not be more different. And this is so crucial. Before you even think about buying a stock, before you analyze a single company, the real game, the first battle, it actually begins right up here in your head. It's all about psychology. So let's just start with a number. $8 million. This was the fortune that one man, very quietly, managed to build up over his lifetime, completely under the radar. So when you hear a number like that, who do you picture? You're probably thinking of, some Wall Street whiz in a corner office, or maybe a Silicon Valley CEO right after a massive IPO, right? Well, you'd be wrong. It was Ronald Reed, a janitor and a gas station attendant from Vermont. And his story just perfectly illustrates this core idea. Building wealth is so much more about your behavior and your discipline than it is about having some stratospheric IQ or a fancy job title. Our guy Tom, the patient builder, he understood this on a deep level. He knew that real wealth isn't the flashy car you see. No, it's the assets you don't see working for you in the background. Steven, on the other hand, was always getting tempted by the price of status, mistaking spending money for actually having it. All right, so let's dig into Tom's actual toolkit and see how he built his wealth machine. Now, this isn't guesswork. It's a real framework, and it's built on the timeless principles of the legendary investor Benjamin Graham. The cornerstone of this whole framework is this powerful metaphor, a way to handle the day-to-day craziness of the stock market. To really get it, Graham asks you to imagine that you're in business with let's say, a very peculiar partner. And this partner's name is Mr. Market. Some days, he's just euphoric, offering you absolutely outrageous prices for your shares. But other days, he's deeply depressed and wants to sell you everything for pennies on the dollar. Tom uses Mr. Market's pessimism to buy great companies at a discount. But Steven, he gets swept up in the emotion and panics, selling right when Mr. Market is at his absolute lowest. Now let's look at how Tom protects himself from, being wrong. He insists on having a huge margin of safety. This chart shows it perfectly. If he calculates that a business is really worth $100, he won't even think about buying it unless Mr. Market offers it to him for $60. That $40 gap, that's his buffer. It's like a Viking ship built with an extra thick hull, just designed to withstand any storm.
And Tom doesn't guess. He's not just winging it. He follows a very clear defensive checklist. He's looking for big, stable companies with strong financials, a long history of paying out dividends, and, of course, a fair price. He wants to make sure he doesn't overpay. This disciplined process is what keeps him away from the speculative, fermented fish of Reddit stock tips that are constantly tempting Steven.
Sooner or later, it happens. The market goes completely crazy. You get speculative bubbles, you get terrifying crashes. It's just a fact of life for any investor. The real test is how you respond when you have to face that madness. Here's a perfect example. A hot news stock, we'll call it Walmeta, is all the rage. All the experts are calling it the next big thing. And Steven, he's got this massive fear of missing out, so he piles his entire retirement fund in right at the peak of the hype, what some people call the peak of Mount Stupid. And when that inevitable crash comes, he panics. He sells everything for a huge loss. So how does Tom react to that exact same 60% crash? He sees it as an opportunity. He just sticks to his simple, automatic system of investing the same amount of money every single month. See, for him, a market drop isn't a fine for being wrong. It's the fee you have to pay to get great long-term returns. When prices are low, his investment simply buys more shares of a great business. Simple as that. Poor Steven. He fell for the oldest trap in the book. He got so caught up in the story, he convinced himself that this new technology had created a new world order, a world where the old rules of value just didn't apply anymore. But they always apply.
So, after decades of these very different choices, what's the final score? What was the real prize Tom was actually working toward all that time? I'll give you a hint. It wasn't a luxury car, and it wasn't a bigger house.
By patiently following the framework, Tom basically built himself a time machine. He just ground out that first $100,000. That's always the hardest part. But then the snowball of compounding just started to take over. By the time he was 38, his investments were actually earning more than his job. And at age 43, he was able to retire, a full 14 years earlier than his peers. And this right here, this is the whole ballgame. Tom's prize wasn't just financial security, it was freedom. He bought back his time, which is the single most valuable asset any of us will ever have. His money now works for him. But Stephen, he's still trapped, working for money, forever just trying to chase his losses and get back to even. So the most important point, the one we want to leave you with, is this. The intelligent framework, it's not just a strategy for getting rich. It's a tool for buying back your life. It's about deciding what you want to do with your Monday mornings. So the final question isn't really about money. It's about what that money can buy you. What is your time worth?